right, hello and welcome everybody to another Pepperstone live event here discussing, of course, technical trading, scalping and everything else. Today we'll be going through a couple of interesting topics, but we find ourselves at probably one of the most important times of the year, and that is earnings season, but not just for one particular stock, the most important stock in the world. So we find ourselves just ahead of Nvidia. You may be watching this during or even after the event, but know this, the markets are expecting around a $300 billion move, and it could be maybe not as big as that, but of course, whenever the markets expect moves like that, we're talking about historic stuff. So what a day to be a trader and an investor in markets. Tyrone, how are you going this week? It's an exciting time, as always.
Yeah, good. Yeah, welcome everybody. Yeah, now look, we've seen some really good moves this week as well. Yeah, some of the currencies are starting to hit their marks, and yeah, the dollar's going to give us some, well, plenty to talk about shortly. But yeah, look, none bigger than Nvidia at the moment. A lot to look forward to here. 300 billion, you say?
Yeah, $300 billion. Yes, that's the expected options flow move. So it's very, very large. So guys, today we'll be going through in-depth market insights, obviously covering a bit of day trading, scalping, swing trading guidance. We'll be going through some actionable strategies, some of the ways that we like to approach markets in a different way. How do we find structure? How do we find supply demand patterns? And of course, we'll be doing that all in the vicinity of looking at the live charts with you guys. If you have questions, please feel free to put them in the comment section and we will answer them throughout. Let's get started though, Ty, I think with Nvidia here, because of course we are at this very coiled level just before the big news. And this is often where you find yourself. You find yourself before a news event, markets will either be usually at a key kind of resistance or supply level, or they'll be at a key support level or some form of demand. And the reason they're at these zones is because, of course, the liquidity that comes out when you have these huge news events allows markets to move to the next level. And this can be great for day traders, scalpers, investors, and everybody else to really start to focus in on the structure of the market and understand what the markets are telling you. So if we look at this market from the top down, we'll just use the daily here, for example, we can clearly see, Tyrone, that this market is coiling. Effectively, we have a lot of single kind of ranges here between a pretty tight price, and the market's getting ready to have what you would have to think is probably going to be an extreme breakout, and that can be great for us as traders content, because this enables us to say, well, you know what, it's had a pullback in time, it's coiled, and now it's ready for a large big move. And as technical analysis traders, we can start to kind of, you know, in some ways speculate on where could those moves be if a certain thing happens.
Yeah, no, most definitely. Look, it's already had a massive run, and it is setting itself up now. We do love it when it does coil before a big event like a news or earnings announcement. So realistically, you know, you'd be foolhardy at best to be picking a direction as to which way it's going to go, because really no one really knows. But I think understanding where the zone needs to break before you can actually get involved, I think, is the important thing here. We know that, you know, we have struggled to make another all-time high. Obviously, we can see here on the chart, this is slightly lower than the previous two highs where we're sitting right now, but we've got two very, very clear, distinct markers where if we do break to the upside, we've got to we need to understand that there is resistance right there from the two previous highs. And of course, if it breaks to the lower side, which is a very big possibility too, it's got a lot more probably room to move, if you like, without a lot of trouble. So yeah, we could easily find ourselves back at that, maybe that 38.2 fib or something without a lot of drama. So I think it's going to be a really it's going to be a key announcement. There's no question about that, but I wouldn't be guessing as to which direction it will go. I think just understanding the upper level and the lower level, and when they eventually break for us, we just trade in that momentum.
The reason I bring this stock up, Ty, and why I want to talk with everyone about it today is because what you'll notice is that markets are actually synchronized together. So whether you're a Nvidia stock trader in this case, or you're somebody that trades the US 500, NASDAQ, or even currencies, they've all hit these critical zones at the same time. So we do know that Nvidia is, of course, trapped between the two prices I've put here on screen. So that's the 130 and the 123. If markets break and close above, then that suggests, I mean, in my opinion, it probably suggests actually an all-time high is probably coming for Nvidia. And from the downside, then of course, we can speculate on things like 38.2 fibs or even 61.8 fibs, because it was such an aggressive move. There's not really much volume structure before this point. One of the helpful tips, I guess we'll call it tip one here today, would be if we got a fixed range volume profile and we pulled it from the low all the way to the high, we're not going to pull it across that level. What you'll notice is that we haven't really had a fair, what I would say, large amount of volume all the way on the way up. It was actually more concentrated around this area in here, around the 104, 105 range. So that also suggests that there's not that much necessarily support or market structure on the way down, and it could open up to these points. Also, when you're talking 300 billion, that means 10%. So of course, if you're marking out what does 10% mean, the 38.2 fib just so happens to be exactly perfectly on the 10% number, and the top end also just so happens to be, as you can see here, perfectly on the 10% number. So I always find that hilarious about markets. They'll often set up with beautiful, people say technicals aren't a thing, but then why are the markets setting up with ranges that literally either put it straight into the high or with ranges to put it straight to the low? So some interesting stuff there, I think, some great learning experiences. Now, as we said, the markets are stuck, Ty, so all of them are. It doesn't matter whether we're looking at S&P 500 or, as I said, Nvidia. You'll notice here, it's also doing this coiling, this sideways action. And while the trend is incredibly aggressive and bullish, you'll notice it stops just before these previous highs, enabling us as traders and investors to really start to hone in on these levels. So with something like the US 500, what you'll want to be doing is you want to be paying attention to the smaller timeframes. What are they doing? What are they telling us? And at the moment, I would say this is what we call a dull market. Now, dull markets are notoriously hard to short. And the reason they're notoriously hard to short is because every single time you do get this little sell in there, you think this is going to be the one, and then it goes and it makes a barely higher high. Now, they always say don't short a dull market, don't they, Ty? And in this case, we haven't really seen a clear break of a major level. Could we see one today? Absolutely. But what happens if this thing breaks to the upside and starts to go? It's clearly going to bring us an all-time high. And yes, at the same time, that brings us into a momentum-based move, doesn't it?
It does. No, that's right. And really, and if it does start to cycle higher, I mean, we can see the damage that it can do when it does start to really move. Like it can really ramp up. So if I was going to have a guess, as to which way it might go, I'm leaning towards the short, and only because it actually syncs so well with the fib pullback. And I think that would create a trading opportunity in itself. I think that would actually be the better trading opportunity, because if it does that, it gives you an opportunity to actually reload on the long and actually aim for these current levels that we've got now. Whereas if it does go to the high side, it's hard. We're going into all-time high sessions, aren't we? I mean, we know that we're at a very high level, pushing 5,700. Yeah, I think I would rather it pull back. I think that would be the better move going into September. And I know it's an election year, and all that does make a difference, of course. But the market's definitely waiting, and I think if it pulls back for us, it creates a better opportunity. Going into all-time highs, like pushing past 5,700, makes it difficult to trade, Tom. I mean, we know that we don't like going into uncharted territory, into a seasonally potentially weak time of year as well. So we're looking for the better opportunity. I think the better opportunity will come if we have an initial short.
Yeah, so there's a few other things that you can consider here as scalpers and day traders as well on markets, as well as swing traders, and that is that we have left behind two notable big gap ups. This has been a very aggressive move. We've been on the channel talking about how we thought the markets were quite bullish to these points, and they've continued to kind of gap through these levels. One of the things is here that if the markets do pull back, where is the best level? Is it 54, 55? As you'll notice over here, I've got a Fibonacci kind of sitting there, 38.2 fib, very well known pullback fib, sitting at around that number. And at the same time, when you actually synergize these markets together, you'll also notice an anchored VWAP sitting around there. So 54, kind of 50 in particular, is a very key zone. And this is what you're doing as a trader, whether you're swing, whether you're day trading, or whether you're scalping, you do want to still be on these higher timeframes. This is a 2-hour time frame and a daily time frame. And what we're doing is we're just looking for key zones of interest. So would this, and I ask everyone in the chat right now, if the market comes down to, let's say, 54.50, is that going to change the higher timeframes, let's say pretty much 4 hours and above? Is that really going to change the trend? Is the trend still going to be bullish in that case, or is it going to be bearish? Let us know in the chat. And while we wait for your response, I guess one of the things here is that when it does come down to these key levels, let's say that does happen, what are we going to do about it when it comes to this level? A great thing that I heard a few weeks ago, Ty, was that somebody was listening to our show about 3 weeks ago when the markets were falling, and of course the VIX hit 65. And I said to everybody, one of the things was that Nvidia had hit underneath $95. That was a massive gap fill, and of course it was flash crashing. And I said, well, you've got to. 3 weeks ago, if you said, oh, if Nvidia hits 95, are you going to be able to buy it? Everyone would have said, yes, of course I can do. I'd buy it. Absolutely, I'd buy it. I'd buy it. But then at that moment, because of the fear they were having, they couldn't pull the trigger. And I said, well, what are you going to do about it? Do you have a plan? And I think that's the problem with a lot of scalpers and day traders. I know it was for me originally, and that was that I didn't think about the markets from setting these levels up. What happens if the market comes down to 54.50? What are we looking for? Do I have the patience to look for that level and then wait for my replicable system? Am I just going to buy the dip? Now, I'm at a conference right now, Ty, and I've been talking to a lot of professionals, industry professionals, and I think everybody here is saying it's much better to buy the what we call the V. And for anyone that doesn't know what the V is, it's when it comes down to these levels, you're actually better off buying the recovery than you are buying the dip. And the reason is because, of course, then you're buying at least the momentum after it has already hit the level that you've already wanted to, plus then it's recovered. It's simple and easy to think about, but it's profound.
Yeah, I think it's really important. I think a lot of people overlook that, Tom, where they're quite happy just to buy the dip, but really buying momentum is really following price action. Price action is everything, as we know. And yes, are you going to leave a little bit on the table because you're not getting it right from the very bottom, perhaps? But having momentum on your side is going to give you a massive advantage, right? Because you got price action in your favor then, and as much as you're maybe leaving a little bit because you didn't get the exact bottom, you're going to get a more sustained move anyway, and with more assurance that there's enough power behind it. If you're trying to buy the dip, there's no guarantees. It may well keep going, and it's done it plenty of times on some very, very big pairs, even in the last week.
Yeah, absolutely. And I think what we'll see here is that this is a very well, again, this is just look how well synergized this zone is. Anchored VWAP, considered an incredible indicator that I would suggest that everybody out there starts to play with. You'll notice what I did before was put it behind the low, a very good strategy for when you're looking for a key pullback level. A Fibonacci that we pulled onto the chart showing us a 38.2 fib around 54.50. And then on top of that, recognizing that this was where the market closed and then the market gapped up. So therefore it left all of this price in effectively discovery outside of the futures market. So all of these things synergizing, you've got 3 reasons to like 54.50. Does that mean it's going to turn at that point? No, but it does mean that you should be looking at that from a perspective of a scalping and day trading mindset, and then of course creating a replication setup around it. So this is just exactly how you want to break it down. You don't have to keep it like really complicated, but what you should be doing, Ty, whenever it comes to this, is we've got to be setting alerts. So of course you want to be using your Pepperstone platform, whether it's MT4 with an FX Blue attachment, or I think it's called Advanced Trading Tools, or it's the TradingView platform. You can add your alerts, and I'm going to add it just above 54.50. And if that happened, well, then we would have a plan and obviously be able to hopefully work on that. A few people saying good evening.
I really like the 54.50. For the record, I really like the 54.50 level. Like, and as much as I like it, will we be buying it as soon as it gets there? Absolutely not. And I think that's the important part. You've got to wait for that turnaround, wait for price to kick into that direction.
I think there's a question here just saying your screen's in mini mode. I think you should be able to edit it there, Samad. So you should be able to, I believe, make it bigger and stuff. Is everyone else being able to see everything clearly? I hope you would be. And Silvio said here that would be bearish. I wouldn't say it would have changed trends. So I think it's very important to also think about where is the last. So I guess you could say here that on any time frame, probably underneath daily, it might be starting to go bearish in signature, because what have we got here? We've got a high, we have a low, we have a higher high just eking out, and then we would get probably a lower low. On anything above a daily, it's a bit of a trick question, isn't it? Anything above probably a daily, you're not going to be seeing that, because you might say, oh, well, here's a low, here's a high. It's going to be a very marginal change of trend if that's it. So how would I look at it? I'd still say you're overall in a bull trend on the high time frame, but probably you're correct. Anything on the 2 hours or below, or even maybe the 4 hour, would be bearish in sentiment. And yeah, it's a great level. I think Ty agrees as well that
It's a
it's a
very good
fantastic
level.
zone.
Yeah.
Yeah.
I think just for everybody out there too, just to sort of address that question, with this new format that we're using, you should be able to actually adjust the screen however you want it. You can zoom in, you can zoom out, you can get rid of the cameras if you like. You can do it however you like. It's actually designed with you in mind. And I think you can even zoom right in. So if it looks like it's a little bit small on your screen, you should be able to zoom right in as well. So have a little bit of a play with that. If you have any questions, certainly let us know. But everybody's got full control of what their screen looks like and how you want to lay it out. So just have a little bit of a play to give yourself the best user experience.
So you mean I can see the screen after going blind, looking at candlesticks over the last 20 years, Ty?
Correct.
I can finally zoom in. I actually just thought about it. It's been a long time. It's been 20 years since I first started. I actually started before. I started when I was 16. I was just writing a script the last couple of days for my presentation. I thought, it's been longer than I thought it had been. But yeah, I started younger than most. But I will say this: I still love it, and that's what it takes. You got to keep putting in the work. Remember, with trading and investing, it's always a learning journey. You will learn more things every single day. And that's what keeps us in this passion of trading and investing. And, I was just thinking about Ty. I'm still excited every time I look at these markets. I don't know how that's possible, actually, but maybe I'm totally addicted.
Well, I think the beautiful thing about trading, is the fact that you're actually seeing something different every single day. It's like going to your workplace and you're experiencing something different every day. And that's what keeps it exciting.
David says, when Tom started, he drew the candles with crayons. It's probably, they used to put it on chart paper, Ty? A few people that used to do that.
We had to do that as part of our course. Actually, when Tom and I were getting educated, we had to actually draw charts on the charting paper, and we had to do Renko bars, we had to do all sorts of crazy stuff. Tom's so excited about trading that I think he forgot to do the disclaimer.
Oh, no, it's okay. It's done on there.
It's okay.
It's fine. It's fine. Yeah, we have the general disclaimer, guys, as you guys know. But yeah, it's all good. So let's quickly go here to the US dollar and quickly consider this chart, because Ty, we discussed this before jumping on live, and I think this is the perfect scenario. And we know a lot of currency traders out there. A perfect scenario for us to actually do a little bit of work here on scalping day trading and kind of setting up structure. So I'll start here, and then you can take over, because I know you're going to feel some passion here for the euro in a moment. But the market's obviously tanking on the US dollar, and you know what? We've actually spoken about this at great length. We talked about it in last week, and we spoke about the replication behind probably continuing to go short. Now it actually went even a little bit shorter than we'd had marked. But Ty, I remember saying specifically last week, pretty sure we were talking about 150, 180 quite a lot. And it's nice to see it come in, because currency's getting good again, and that was fantastic. But just remember, if you were really longing any period underneath this candle here in particular, this one here that happened on the Monday 19th, that's not really a great idea. And the reason we said that is because Ty's going to say, "Hell no," because we're underneath the daily 20 firstly, so the trend is clearly down. You can see here it's respected that quite a lot. But on top of this, we had some targets, the 180, 150, because we talked about the legs. Remember the ranges that the markets were going down on. So if we take these ranges here, I'll just quickly show everybody. This was the range, and then this was the range. And you can see how it's marked out. Look where we are right now. This is actually a great way of looking. And if I encourage everybody, go and have a look at our last video where we talked about the US dollar on our previous one. It's on the Pepperstone YouTube channel as well, guys. You can watch that in the replay. And it was fantastic. So it's come down here now, Ty. We can start to drive into the smaller timeframes, can't we? Because now that it's hit this key level, which we already suspected, we're looking for that reaction, aren't we? The bullish reaction. So what are you seeing?
I'm seeing a double bottom, Tom. And really, it's another lesson, actually. The other thing we'll talk about as well, and I think we talked about it last week as well, but I might reiterate it because it's quite important. just because it's a round number and it might be parity and it might be the 100, don't be fooled into thinking that it's always going to reach it. The reason we were talking about
Yeah.
the 180 to 150 level is because it's a very, very common level that's found very strong support in the past. So sometimes people get a little bit maybe what would you say, excited and think that, you know what, it's going down so quickly that there's no way it's not going to get to the 100 flat. There's a very, very strong possibility that it will not go down to the 100 flat before it actually returns up. So you really want to set your targets and set them with a target that's actually achievable and that makes sense from a technical standpoint. Don't just rely on round numbers to draw to it, because you will find, and this is why Tom and I always use the 80% rule, that we actually do take the trades earlier, take profits always a little bit earlier, because quite often the market will really try and screw you over in that sense, doesn't it, Tom? The amount of, we've seen it a lot. We've been doing this for a very, very long time, and it can really disappoint you when you least expect it. So we're looking at a double. We're looking at a double bottom here, of course, on a 2-hour chart, sitting at a level of very, very strong support. Okay. So has it played out yet? No. Is it trying to set up? Well, it looks like it's already trying to set up. It's already at the neckline. You know, the beneficiary of this is going to be my preferred trade of the week, and that's going to be actually a potential short on the euro. The most traded zone, I'm glad you brought that up, Tom, is going to basically be the target and the expected move of this double bottom. Lo and behold, there it is. Literally drawing it as I speak. I love it, and it makes sense. We talk about proofing all the time, okay? And yeah, when a pattern is proofing into the most traded zone from the volume analysis standpoint that we can see there, it really solidifies that what you're identifying and what you're trying to trade is actually a very, very solid base. You can come up with 3 or 4 long from here, but again, the trade, more than likely people would be shorting the euro. So that's a very, very good proofing concept on that double bottom straight into, and I think that's a really good way and demonstration, Tom, of how the volume profile can actually help proof what a pattern's expected target's going to be.
Oh, absolutely, Ty. And you know, I was again, even the talk that I'm doing tomorrow here in Sydney, Australia. I'm actually going to be talking a bit about the volume profile, because the volume profile is the scalper, the swing trader, the investor, and the day trader's favorite friend. If you're not using volume profile, maybe you're under a rock, I'm not sure. But usually speaking, you should be starting to bring that onto your analysis, because it's just so powerful for finding those levels. And you can see there when we look at the dollar index futures, how it was literally all synced. And that's what we love. You know, again, the dollar index is at key demand, as Nvidia, this is the running theme that I want to go with tonight, is that Nvidia's at the resistance supply, and the S&P 500 and the NASDAQ are at the exact same levels. And you'll notice when we go to a few other pairs in a moment, a lot of them are synchronizing this way. So the euro, Tie, has actually already started to kind of go weak here over the last couple of hours. So has it done enough, or is it actually the real big move here, actually, if it takes out this one kind of 11 area?
Yeah, it's a really good question, Tom. I think that, yeah, the dollar index looks strong from where it is. Like that, it does look really strong. The euro has actually reacted a little bit, probably more negatively than I would have expected at this stage. I thought it probably would be just starting to keel over, but it has actually gone a little bit further than probably expected already in terms of where the dollar index is. Okay, so, but I think it's got a little bit more to go. I mean, really, yeah, in my mind, I think that probably 110.50 is probably the likely target for the euro, and that's very close to the 20 moving average where that is.
Current.
Yeah, and it is. It's a crossover very, very close to both. So I think it's a very logical target for the euro, and the fact that it's already started to move and maybe a little bit more aggressively than the dollar index is actually rising, could set the tone for what's happening in the next 24 to 48 hours.
Adam says here, it's a never-ending puzzle, and I love it. Yeah, absolutely. It's great. Look, it's great to see so many traders and investors that have stuck around since 2020, 2019 that are coming in now, and they're learning so much. You know, I would say that the knowledge inside of this community here, inside of just the general trading community, is always improving. Obviously, we have to stay ahead, though. You know, to gain edge, you must stay ahead. So you'll notice there, Ty's at 150. We just so happen to find anchored VWAP sitting there. We've got a moving average sitting there. Let's just overlay a fib with the last move as well. I've just got this fib set to 38.2s and 61.8s, but I'm going to tell you that's pretty much smack bang around a 50 instead. 50 is still a good fib. I wouldn't say it's as good as 38.2 or 61.8 Ty, but it's still okay. And there could be even other things that people are putting on in terms of indicator charts here. So the euro significant level is probably about 111. Break underneath is going to really open up this 110 kind of 50. This is also going to open up people that are starting to want to go potentially even towards the long side of the euro. Maybe there's a turn here. Maybe the turn's more down the structure of 110. Two very key levels though to be watching on the charts. So yeah, some great synergies there for sure. And speaking of synergies, Ty, I want to go over to silver for a moment. We're just going to load silver on here on the charts. Now, you might be aware that if you've been watching this series for a little while, and you've been watching us on YouTube as well with Pepperstone, that we've been pretty bullish silver. Now, of course, silver's pulling back at the time of this recording, so we're going to be looking very closely at this daily 20 moving average, sitting around $29 for the ounce. But this actually has the same form of replication with it. We have a 20 moving average that has been rejected, then it's come up and it's found it, it's of course gone bullish against it, and then that dynamic kind of resistance can become support. We had a turn point down the bottom here in terms of structure, and now we have, you'll see here, I've got a little bit of a stop sign, and what that's basically telling us in this particular indicator, which is one of the ones we do have here at FX Evolution, is basically just telling us to be cautious of the long and that it's probably going to do a lot more of this moving forward. So you'll notice that we got that on quite a few of the charts in recent weeks, and I guess that's just what you would expect. Again, coming into such a huge, important piece of news, such as I don't think we've had a stock like this for a long time, Ty, where the market relies on it to be bullish to go up. I mean, it's not even 300 billion. It's probably $1 trillion move that could come off this stock.
I think the last time we saw it was the last time Nvidia reported, actually.
Yeah,
I don't think we've had a big one since. Its last two earnings reporting have been the biggest events of the market.
And a lot of people ask us, what's your opinion of this? What do you think Nvidia is going to do? Is it going to be bullish or bearish? I mean, if you're giving, again, I was watching today some people making, predictions on the US election and things, and this one person has like a pretty good track record, let's say, Ty, and the person says, if I went with what my opinion was, then I'd be wrong a lot. But instead, I go with my systematic approach. And that's the same thing you need to be doing in trading. See, if I said, what's my opinion on Nvidia, I would say I only need to know one number, and that is $100 trillion. And why do I need to know that number? Because $100 trillion of net worth was at Nvidia's unveiling of their new hardware earlier this year. So to me, that shows you a lot of demand. If you have $100 trillion worth of CEOs in the building, you can't tell me they're not about to try to do some deals. So, of course, I think they've sold out everything in advance and it's all good, but that's my opinion. And my opinion could be wrong. So they could have maybe some issues with production, which we've already heard things about. So all of these things, it's very important with trading to treat it like a business, treat it like replication. It's why we say patience, react, don't predict. And remember, one of the key learning cases that I've learned over the years from Warren Buffett, from Charlie Munger, from studying these Druckenmiller, Stanley Druckenmiller, all of these top investors, is that they all have incredible temperament. So when we go here to silver, you'll notice, of course, it has been selling off a little bit. You would say that in a 2-hour, 1-hour time frame, it has started to weaken because, of course, it went from a high to a low to a higher high to a lower low. So therefore, in a little bit of a downtrend. Some scenarios that a day trader might look at would be they could do things like pulling a volume profile through this structure. So that is that where you get your fixed range volume profile and you pull it through the structure here. And you say, okay, well, has it traded a lot in this zone? So it's been pretty, I would call that a pretty equal transaction kind of movement. So I wouldn't say the POC is super good or anything, but let's say the market comes back up here. This could be a place that day traders and scalpers would target, isn't it, Ty? It's a very good level for us to be looking for, and that's something I would do.
Yep, it's a very, very solid channel that, and I think the volume, yeah, really well, it doesn't exaggerate. It actually consolidates why there's so much price action in there. So the fact that it actually could get up there and find that resistance right there, it's definitely that's an alert job. That's what we're talking about when we're setting alerts,
Yeah,
planning
exactly.
ahead and being ready to actually, yeah. And if it does it quickly, the 20 moving average is going to be there too. Like what? It's a double
Mhm.
party.
Exactly. So you're going to have the 20
Mm.
around there on this 2 hour, which sometimes can be well respected. You've got your low, which is obviously around 28.90, which we know has been respected a few times. Daily close around this level as well, which is important. And these mark the two most important levels. If you were in this chart right now, you'd probably be more towards the bearish side, I guess, on the small time frames, because you'd be looking for this price. If you were in, let's say, a daily or weekly trend change towards the upside, would you be scared? The answer is quite simply no. And it's fine to be like that as a trader. Um, so yeah, you've got no problems as a trader to be going for those types of things.
No.
So anyway, this is in the middle of nowhere land at the moment, but of course alert levels that you could be set. Whereas if you looked at the dollar was like literally trying to make a move as we were speaking just before. Got a question coming in here from I think it's Fuad, I think. Sorry, I mispronounced your name there. But 20 exponential moving average and 50 exponential moving average are the two that we generally have on the charts, and then also a 200 simple moving average if you're interested in coloring them up. We go with red for the 20, we go with blue for the 50, and then the 200 will be the green one. So yeah, all right. Okay, so silver, obviously still overall high time frames, Ty, looking much better. We might be having a little bit of drop connection. We do apologize. Generally speaking, it's fine, but I guess, when traveling, sometimes the hotels can be like this. 31 kind of, I guess, 31.50-ish zone, 31.30-ish zone would be the area if on the top end upside, if the markets end up going bullish, though. Silver could do some really good stuff. Ty, we showing some connection issues? I think we may be, but that is
I don't
sometimes
think
what
so.
happens,
I haven't
unfortunately.
seen I haven't seen
No.
any dropout.
Okay, this thing's just sitting there warning me, alerting me, shutting things.
Yeah, no,
That's okay.
it's been fine. I think it's been fine. I haven't
Oh,
seen any dropouts.
okay. All right, cool. All right, so next one here is gold. So
Gold.
again, something we do like. I'm a big fan of gold. Again,
Mm.
some marked levels of interest that I would set alerts for. 24.80. You'll notice 20 moving average on the daily is just behind that as well. So a very key level, I believe, for the demand structure in this market. Something you could be looking at from the smaller time
Mm.
frame perspective. If it does come down to this layer area, I don't know if I'd like instantly go, oh, wow, let's buy the dip, Tie. I think it would be one of those situations where, let's say it comes down. I want to talk about this. I'd probably like rather see it create some structure and do something like that. Now, if it does something like that, I'd be a lot more comfortable with the
Yeah,
purchase of gold at this level.
agreed.
Your thoughts?
Yeah, 100%. I think that gold's been very reactive recently, and look, it looks strong. There's no doubt about that. But a pullback to that 24.80, I think it's a golden level, really. Especially if it gets there in a hurry with the 20 moving average catching it. I'd love to see a week's worth of consolidation there on a daily chart. That would make me very happy. And that might be a little bit greedy, even if we get a couple of days. I'd like to see it consolidate there and then turn around off that level. And I think if it launches from there and starts to track higher, I think that there's an extraordinarily good chance that we're going to see another all-time high. And each all-time high is just getting a little bit larger on gold. I think there's good opportunities.
Yeah, look, when you look at the weekly on gold, which you should always look at, other than it having a bit of a weakness sign here, in general, the actual close prices have been fairly good.
Yeah.
So, whatever the pullback is, I do feel like there's still buyers here when it comes to gold, and certainly something worthwhile paying attention to on the charts. So there are some other pairs. I'm sure there's a few in the charts that you guys want to have a look at. Please put them in the comment section. Some currencies would be great to look at tonight. So make sure to put them in right now, and we'll answer them in a moment. But the other one is going to be Bitcoin. So you'll notice that Bitcoin comes down to a level I had already marked on the chart, which I called first bull level. Now, I say this because basically this is an area where I expect the market to find some form of institutional buying. And Ty, I got a message from somebody on X today that's fairly into the old cryptoverse, and they sent me a person, and let me just quickly get up the liquidation amount of how much this person got liquidated by, just so people can see how nasty the markets could be. So he sent me a picture of what they were hunting, and it is a liquidated position to the size of $63 million, which is a decent amount in the old Bitcoin verse. So yeah, this person got absolutely smoked for about 1,100 Bitcoins, and I would say that is kind of the hit and run that tends to happen in crypto. So you do need to remember there are pretty much, give or take, around 100 super whales in Bitcoin. And I'm not talking small. These guys are as rich as the richest people on Wall Street, and they love a good movement. So yeah, it looks like there was a bit of a liquidation today. The market's obviously flashed into these levels, but you can see that you may have had this marked out already before. I didn't modify that; it was just sitting on the chart. So I moved it up slightly there. There you go, I had like there. But if you set an alert, then at least you'll be aware when it comes down to these prices. And these are the points that you want to be starting to look at. So when I look at this on Bitcoin, maybe it's a bit early to tell, but we can go into smaller structure and start to look at how the markets have actually been reacting to this point. So you'll notice it comes down like a freight train, hits the area, finds a buyer, comes back down. I'd like it to make a new lower low here and continue to freight train down generally. To create structure, but it's starting to create, the structure itself, and this has me interested. So what would I do? Well, I would set alerts underneath. I would set alerts maybe above this high up here, and I'd be very interested in potentially the prospects of a setup here. But I think that the winning notion in trading, Ty, is to always have the patience to look for it. Just because it's come down doesn't mean it's going to continue to rip up, does it? I mean, its market is very, very negative on this clearly at the moment.
Yeah, absolutely. Yep. No, it certainly had a turnaround. The last 3 days have been awful.
Yeah. Oh, yeah. And look, I've obviously been more bullish than bearish in terms of structure itself. So I really liked it over here. We spoke about the bullish side. It broke up. It hit the first key level, which is why you want to be looking at technicals. So again, if we have a look here at structure on the daily, where was the last level? And I'll mark this across so we can see it. Oh, what am I need better. There's my drawing tool. So we want the rectangle here. You can see this is clearly that level of supply that the market was going to react to. It's a great level for TPs, great level for at least break evens on breakouts. Exceptionally good breakout strats in here, by the way, very good replication. And then we're looking next up to also around 68K. So that's going to be the next level if we do keep going bullish. But down here, a very, very key level to see a turn. So over the next probably 24, 48 hours, Bitcoin's something that you may want to look at on the charts and just be aware of the market structure. Again, a day trader, a scalper is going to be looking at the structure on the small time frame, because is it a key level? Yes, it is. It's at a key level. So now we need to pay attention to it. US 2K, just before we take a question here, Ty, same thing. You'll notice 2250, a level that we marked out together on the show. And we've spoken about this one since pretty much 3 weeks ago, and it got hit. You might say, well, Tom, it didn't hit exactly. Remember what Tyrone said before about 80%. There's a reason we take 80%. So yeah, is 2250 the best number? I would say yes, but that's your number. So what are you going to do? Maybe take it a little bit earlier. And you've got to put this in the perspective of psychology in the markets, Ty. When I worked as well in the idea of talking to people about, let's say, mums and dads or large institutional even buyers, you'd be surprised how often they wanted round numbers. If you said to someone, let's say Apple, and was going towards $100, I think we should sell Apple at $99.60. They'd say, I want $100. And you say, no, I want to sell it at 99 and 60 cents. They'd always say, no, I want $100. And if you looked at the lines, the level 1, level 2 data, $100 would have a bazillion trades on it, wouldn't it, Ty? And probably 99.80 would have a bazillion trades on it as well. So you're just better off putting it slightly before those levels. Yeah. So again, a lot of synergies here. I think we've got a question for the odd US dollar, Ty. So let's have a look at that together and break this one down. So I can see why they're saying the Aussie, because it has absolutely smashed that level you spoke about last week. It's hit it, What do you think?
Yeah. Um, Given that the dollar index is starting to show some strength, I think the trade's already happened, really, hasn't it? Like we've already seen them move up. Yeah, look, it hit the 68-cent mark. That's what we wanted, really. I think now, I think I almost want to see it. If even if we are going to trade it long, I think I need to see it break through and actually pull back to it. Like from above, if it's going to continue on. But given that we've got dollar index strength, yeah, potentially starting to kick up, I could see a little bit of weakness here. We've already seen shooting star on the daily, and the week is already looking a little bit doji-ish. So yeah, potentially a little bit of weakness here on the Aussie, I think.
Yeah, so well, I've got a big star here as well. I don't just have an even. I don't have. I have a star symbol. But at this
Hmm.
point, yes, you can see. Well, you can see the last time we got one of those, a bit
Hmm.
nasty. But yeah, I would say at this point, it's certainly at that resistance. It hasn't shown any signs of what I would say is a turn point yet. Remember, making a prediction here, while it might be a TP zone, doesn't mean that's instantly a sell zone, does it, Ty? It just means that
No,
it's
not at
the
all.
odds are starting to turn against you in terms of you
Yeah.
believe that you're more of a coin flip. And I don't actually want to be in a market that's a coin flip. I want to be in a market where we have edge. So here we have a high, here we have a low, here we have a higher high at the moment. It could be a dulling market that starts going sideways, similar to the S&P. It could also drop through and go through this zone here. And if that happens, then all of a sudden it opens up this next level of 67. So again, this would be one that I think we would set alerts for. And we would say, okay, let's alert down here. Let's also alert for new highs as well to see how the market's reacting. And I would be very interested in this price in particular to see maybe it comes down and it gets a big wick rejection after an Nvidia earnings. All of a sudden, there could be a serious trade there towards the upside for the Aussies. So it is about having the patience, guys, as much as you can. All right. Well, I think they're the main questions for this week, Ty. As we know, the markets are a little bit lagged, I guess, jet lagged, waiting for the
Mm.
Nvidia results. The US oil was probably one of the bigger moves of the week, making it up here to these areas. And again, key areas, you can see the turns here. And the market's now fully destroying oil all the way back down. So this is what happens. You know, a lot of these, specifically, I think oil as well. I would also caution people on this. Remember, we're in a US election year. There's a lot at stake, and there's a lot at stake about gas price in the US. So in particular, I would say oil could be one of the most hotly contested political style positions in the markets. And that means it may be the hardest trade for a little while here for the next 2 months. What are your thoughts, Ty? I mean, I'm
Yeah.
really thinking oil is tough.
I think you need to play the big boundaries if oil, like the 72.50 we know is very strong. The 78 is very, very heavy resistance. And while it bounces in between those two zones, I'd be probably keeping my trades between those, aiming for the momentum slides. But you're right. I think you're going to be in and out because I think if you stay in there too long, you could get a market shock from oil. If anything's going to shock, I think oil will be the one.
Yeah, absolutely. Samad, we certainly did do gold and silver before, so we covered both of those topics. But in this case, we spoke about the idea of maybe a little bit of a pullback in gold. I'll just show you here to daily to 20 moving average, very key level for it, and that we're currently experiencing what we would expect, which is sideways action. So a lot of kind of what Ty said, boundary style trading. The top's up here, the bottoms are down here, and it seems to be kind of sideways action for now. Overall trend is still bullish, and yeah, we're waiting for the Nvidia result. All right, guys. Well, that probably brings us to the end of today's show. We're very excited to continue to bring this series to you. Some learning outcomes today would be use fixed range volume profile whenever possible. Start anchored VWAP to your charts. And of course, the 20 exponential, 50 exponential, and 200 simple moving average, one of Tyrone's absolute trifecta favorites. So yeah, Ty, any words of wisdom for anyone before we finish up and then we come back next Wednesday at the same time?
Yeah, I think just probably just be wary of big news this week. I think probably keep your trades relatively sharp on the take profit and the stop loss because, yeah, it's a market mover, this one.
Yeah, and do remember, guys, we've got non-farm. I mean, non-farm is it fake news, fake earnings, unemployment numbers tie next week. But yeah, that's coming out on Friday. So non-farm payrolls, the big jobs number, and this one will matter because the Federal Reserve, of course, is slated to cut in September. So watch for the jobs numbers because there will be some crazy currency moves after non-farms. Non-farms happens, by the way, 1 hour before the New York market opens. So you will need to be paying attention to that. Do not forget, it's a cautionary warning here for people that, well, firstly, the vol is going to be big afterwards. I expect large volatility, and I also expect a lot of currency movement. So if you're a currency trader, non-farm payrolls, I believe, next week on Friday. Thanks so much, everybody. We'll see you next time. Bye for now.
Thanks, everyone. Good night.